Hello everyone, my name is Andy. Today is Monday, June 12th. Time is around 7 GMT, and we will have a look at the DAX futures on the Owanda platform. So in my weekend video, I analyzed the higher time frame. I told you I am expecting a pullback in the higher time frame. But of course, that does not mean that we can see a bit more upside in the lower time frame, the 4 hour, the 1 hour, the 15 minutes. And this is what we will analyze today, what to expect and how can we trade this. So as you can see here, from this wave 4 low, I'm expecting a bit more upside in the form of a wave 5. So I see 1, 2, or wave 3 here. A wave 4, which is in or could still be ongoing. I will explain this in a minute. Then a final wave 5 to the upside. The reason I expect more upside is this strong push here in RSI. Normally, your wave 5 does not end so strong. It should be weaker, but please do not forget that this here could also be a valid Elliott wave count, which means that the high is in and that the pullback that I am expecting in the higher time frame, that this pullback will start. But for now, this is my primary scenario, like this. So let's further zoom in to the 1 hour. Yes, so this here is our wave 3 high. This is the 4. So after a wave 3, we have to correct in a wave 4. And I see an ABC structure here as a wave 4. Unfortunately, we did not reach the equal leg area from your wave 3. Normally, this would be an area to go long, like this area here between the 1 and the 1.618 extension. We did not reach this area, so we missed our long trade here. But I have to tell you, there is a scenario. Like now, I assume that the wave 4 is in, but it could be that the wave 4 is not yet in, that we have something like this. So that this was here or A, that this was or B, and that we will now do a wave C to the downside. If this turns out, then this here, this area becomes your area to go long. Now, but for now, this is not my primary scenario. Like price is too far now from this area, so I cannot assume that we will do this. But please also consider it as a scenario that is possible. So if our wave 4 low was in here, then we should start an impulse to the upside or wave 5. And so I believe this here is a wave 1. This is clearly impulsive. And then now we are doing a wave 2, I believe. Yeah, last week we didn't move at all. We were just yeah, sitting here in this range, doing nothing. Tomorrow and Wednesday we have some important economic events. So yeah, maybe today there also maybe today also nothing will happen. We have to see. The market is maybe just waiting for this economic events, inflation rate, and Fed press conference. We will see, but yeah. So here, there's not much to do. Like you have to wait. The only thing I see here, what we can do, is wait for this area as your wave two. Like this is the equal leg area from this ABC here. Maybe let's put it on the 15 minutes. So then this is from your wave A. This is for the moment, or wave B high, and then this becomes the target of our wave C if we go down. If we have a bit more upside first, so then it could be that our wave B is somewhere here like this, then this becomes the target area for our wave C. So yeah, let's see what the market gives us today. But for now, this would be my area to go long. Um, However, yeah, the problem is it could be that our wave two is in here, and that we start to move up from here, and then yeah, we missed the trade, of course, but yeah, so you could actually enter here for a long if you believe that the wave two is low. The wave two low was in here, but this is not the way I trade. Then you are entering somewhere in between. I prefer to enter at the extremes. So I will just wait for this area. I want to see 5 waves down that end with divergence in this area, and then I go long. But that does not mean that our wave two could be in here, and that we start moving up from here. This is equally uh, valid. Like we did not retrace the zero point 0.5 FIP, I believe. Yeah, like this would be the zero point 0.5 FIP retracement. We didn't reach it, but yeah, we missed it. Like we were close. We were close, you know. So it's a possibility, but this is not the way I trade. I wait for this area. And if our wave two low was in here, then we already know the target for a wave three. So then our wave three should end there. So the equal leg from our wave one and our wave two, which becomes this area. And so normally a wave three goes to the 1.618 FIP extension. Okay, so then in this area we could initiate a short again if we see 5 waves up that end with divergence. So this is actually the only trade I see for now. Like not much price action. So if there is no price action, there are also no trades. So I'm waiting for this area to do a long. I'm waiting for this area to do a short. Let's see what the market gives us. So Then there is one more thing I want to share with you. It has nothing to do with today's price action, but it's rather educational. Somebody asked me. So yeah, if you have questions, you can just comment on the video below. I will try to deal with your questions in one of my next videos. Then, and I saw a comment. Somebody asked how I use RSI to to determine my Elliott waves. Here I have an example. It's not the best example, but it shows what I mean. Like this wave one up to the upside. So this is your one. This is your two. Then this is here your three. This should be your four, and then we have a five here. Like how your RSI helps you is, and this is actually a quite reliable pattern that I use. So what you do is your wave. So you make a trend line in RSI. Like this is an upward trend line, and your trend line is made by your wave one and your wave two. So here the wave one low, the start of your wave one, I mean, like this, and then this is your wave two. This is the trend line you make from here, from your low start of wave one, and then the wave two pullback. You see, and then you have so you have this trend line, and then your wave three is where where your RSI peaks or makes a top. And then what happens is that in a wave four, your trend line breaks in RSI. Your RSI trend line breaks, and then you make one more high with RSI divergence. What you can see here, and this is how I identify. This is for me the textbook Elliott wave, like impulse to the upside. But normally I like to see a bit more, a deeper retracement in RSI to have your wave four, and then one more high in price with RSI divergence. This is how I use my RSI. It's not the only way I use RSI, but it helps me to identify cycles. And so once this is over here, once you had your high with RSI divergence, you have a different, you start a different cycle. And so, yeah, we had an upward cycle. And if the upward cycle is finished, there are only two directions in the market. Then you should have a downward cycle, and this is what we have now. So this is how I use RSI. Like a lot of people, what I see on YouTube and whatsoever. A lot of people are using RSI as overbought, oversold, but yeah, this is not really the for me the correct way to use RSI. You use RSI to identify downward and upward cycles. But yeah, it's everybody has his own style, of course, his own system. So you can do whatever you want. But so this is now for me a downward cycle. And yeah, the main question is, as I discussed, is the wave too low in here? I don't know. Time will tell us. But I trade at the extremes and I wait for this area to go long. I don't go long from here, but that does not mean that the wave two could be in and that we start going higher from here. So for me, there's nothing you can do here. The only thing you can do is waiting for this area or this area, unless you have some reason to assume that we go down from here or go up from here. But with the price action we have now, I don't see it in the data. Okay, this is my analysis for today. I hope you enjoyed it. And see you tomorrow for another video. Have a nice day. Bye bye.